Good morning. Thank you for joining today's daily webinar where we discuss your live questions on the air. We cover certain topics. Today's topic is why a solo 401k is a good idea. Again, go ahead and shoot over your questions. As always, today's video is for educational purposes. Please also like this video, subscribe to our YouTube channel, and share it with others in your network to help get the word out to other solopreneurs like yourself. All right, so why is a solo 401k a good idea? Well, Congress created solo 401k plans for the self-employed to save for retirement. So it's a good idea with respect for saving for retirement, especially if you think that Social Security is going to run out, or if you're not going to be a high income earner in your later years. So a solo 401k is another tool to help self-employed individuals that don't employ any full-time W-2 employees save for retirement to help put them on the same level playing field as those that participate in the daytime employer 401k, aka traditional 401k plan. Looks like we have a live question here. I'm trying to file 8881 for tax year, and I'm wondering if I have to do anything differently in the form in years 1, 2, 3 versus 3. I'm eligible for the tax credit for 3 years. So no, it's nothing differently. You have to do the same drill for 3 years, which means you got to file that form 8881 and report it on your business taxes, along with filing that form 8881. You're referring to the solo 401k tax credit, also known as the auto contribution credit, where you can get a $500 dollar for dollar deduction on your business side for a total of $1,500 over 3 years. So therefore, you split that $500 credit over a 3-year period in $500 increments. We'll talk more about that auto contribution credit in a little bit, as both new clients and existing clients would qualify for that auto contribution credit. Great question. Okay, back to our daily topic, which is why a solo 401k is a good idea. And again, feel free to shoot your questions over while we're live on the air here. That's the purpose of these daily webinars, is for you to ask questions on any topic for that matter regarding IRAs or even solo 401k plans. So we cover both solo 401k plans and IRAs. We're well versed on the self-directed IRA regulations as well as the IRA LLC. So we got another question here. I am a 1099 earner. Can my client pay my weekly amount directly into a solo 401k? Great question. And the answer is no, because the contributions to the solo 401k plan A are based on your net self-employment income for the year. If you're a sole proprietorship, it's going to be based on line 31 of your Schedule C after you subtract all expenses and then 1/2 of self-employment income tax. So the contributions flow from your business or your personal bank account, but they cannot flow directly from the vendor or the client that you're doing work for. Great question. Keep them coming. All right, I'm going to send over a link as well while we're at it here that talks more about the solo 401k contributions when you are a contractor, aka sole proprietorship. We have a page dedicated specifically for each self-employed entity type, whether it's an S corp, partnership, or sole prop, or an LLC, taxes, any of the above. Here's a link that talks specifically about making contributions for a business that's a sole proprietorship. Take a look at that. Okay, so why is the solo 401k a good idea? Well, I've already discussed some of those reasons. Now, keep in mind that not everybody qualifies for a solo 401k plan. So you have to be self-employed with no full-time W-2 employees that are non-owners in any of your businesses. Therefore, in order to be truly self-employed, you got to be reporting self-employment activity and not employ any full-time non-owner W-2 employees in your business. All right, let's take a look at another question here. On a yearly basis for the last 5 years, I have moved from after-tax to Roth IRA. Can you explain the 5-year rule? Does it mean that every contribution year to I have to wait till it hits 5 years before I can withdraw? Great question, and the answer is no. You don't have to wait 5 years from each conversion. There's only one 5-year clock. The 5-year clock is when you first put funds into the Roth Solo 401k bucket. So here's a good slide here. So if you made a voluntary after-tax solo 401k contribution 5 years ago, for instance, and then you converted that to the Roth solo 401k bucket, then that means that your Roth 5-year clock started back 5 years ago. So the 5-year clock is essentially where you first put funds into the Roth solo 401k plan, whether a contribution or a conversion in your case. And that starts the 5-year clock. And as long as you've had the Roth solo 401k for 5 years and you are age 59 and a half or older, then you can take what the IRS refers to as qualified Roth solo 401k distributions, which means you don't have to pay any taxes or penalties for distributing any of your Roth solo 401k funds, whether basis or gains. So that's how the 5-year rule works. So no, it's not each year. It starts in the year that you first get funds into the Roth solo 401k, whether by way of contribution or conversion. Let me send over a link to you that talks about the 5-year clock in more detail. Give me a moment here. Okay, here we go. I'm going to share that with you. Okay, I went ahead and just shared that link with you. All right, again, keep shooting over your questions. We'll continue to go over them live here on the air. Let's see. Here we don't have any other questions before we continue here. Okay, so here's an example of a one participant plan where only one person is self-employed. You're going to see that it's just one plan, which is sponsored by the self-employed business with 3 separate holding accounts. One to hold the pre-tax funds, a second to hold the Roth solo 401k funds, and a third one to hold the voluntary after-tax solo 401k funds. Here's a slide that goes over 2 participant plan. So a solo 401k plan can be utilized by both spouses if both spouses work in the same business, for example. Similarly, if you have 2 business owners in the same business, the plan would be sponsored by that business. So one plan, let's say you have a self-employed S corporation and you and your spouse are both working in that business, and neither of you own any other businesses that employ full-time W-2 employees, then you could set up the solo 401k plan and both of you would participate in the same plan, but you would both have separate holding accounts because a solo 401k is a defined contribution plan requiring having separate holding accounts for each participant. So you would end up with 6 separate holding accounts, a pre-tax, a Roth, and a voluntary after-tax for each spouse, for a total of 6. So one plan, separate holding accounts. Okay, so let's continue discussing why a solo 401k is a good idea. So a solo 401k allows for investing in various types of investments. So not only can you contribute to the solo 401k plan as a tax deductible contribution or on an after-tax basis or Roth basis, but you can also turn around and invest those funds in various types of investments, whether traditional investments such as stocks, mutual funds, index funds, bonds, CDs, even treasury bills, but also alternative investments such as real estate, so rental properties, whether it's commercial or residential, promissory notes, where your solo 401k lends money to a hard money lender or a developer or a person that's not related to you. So your solo 401k is essentially acting as a bank. So the note payments go back to the solo 401k plan. It can also be invested in precious metals. I know that's really popular right now, especially with the tariffs that are going on right now in the state of the economy. Many people people invest in precious metals to hedge against inflation. So whether it's gold or silver, for example, it just needs to be qualified metals. Typically, they have to have a 99.99% purity. It can be metals and gold coins as well, silver coins, and so forth. You can also invest in private equity, private placements, tax liens, cryptocurrency. So that's why a solo 401k may be a good idea in that you can diversify not only in equities, but also alternative investments. You also can invest with the solo 401k in these types of alternative investments by writing a check or by wire, where you're the trustee of the plan, so only you have access to the funds. Again, a solo 401k may be a good idea if you're looking to make pre-tax contributions, thereby reducing your taxable earned income for the year. Those contributions will grow tax deferred until you start making distributions, and you can make large contribution amounts. We'll talk about those limits in a little bit. You can also make Roth contributions. That's Roth solo 401k contributions. While you don't get a tax deduction in the year that you make it, those Roth funds do grow tax-free and penalty-free. And you can also utilize the Mega Backdoor Roth solo 401k by making voluntary after-tax solo 401k contributions and then converting it to the Roth solo 401k or the Roth IRA. All right, we got another question here. Has the loan technically started even though I have not received the funds? Can we revise loan terms, principal, start date, or can I cancel the loan and resubmit new terms? Fidelity won't process my one-time wire transfer until funds clear. Fidelity assured me I can easily cancel the old wire and submit a new request. Great question. You're exactly right. You don't have to start making loan payments until, and we're talking about a solo 401k participant loan here. You don't have to start making loan payments until a month or 3 months later after the funds are actually dispersed from your solo 401k to your personal bank account for that loan. If we've already drafted loan documents for you and they need to be revised, no problem. Go ahead and reply to the email where you received those loan documents once you are ready to process those loan funds, and we'll update those loan documents. Okay, so let's keep going here. Again, keep shooting over your questions here as we continue to discuss discuss why a solo 401k is a good idea. Another question here. Suppose that my situation permits me to put 60,000 for 2025 into a solo 401k with the catch-up. I have made no contributions for 2025. Could I then take my weekly earnings of 2K for my client, put 100% of them weekly into my solo 401k, and then borrow against as needed to meet bills? Well, number one, again, contributions have to flow from your self-employed business or your personal bank account, provided you have the net self-employment income to support that contribution. With respect to borrowing from your solo 401k plan, there are very specific rules that apply. When you borrow from a solo 401k plan, that's known as a participant loan. And we're going to talk about that more here. Let me jump to that now. That's one of the reasons why a solo 401k may be a good idea, is that you can borrow from the plan. Let me see if I can find those slides here. So here's some information about the loan. So one, the loan has to be documented with specific loan documents. In other words, you can't just jot down something on a napkin. We would actually need to prepare specific IRS required loan documents when you borrow from your own solo 401k plan. So you would complete our online application that we would collect to prepare those loan documents. We then prepare the loan agreement and the loan payment schedule. Now, those payments have to be made monthly or quarterly. over a 5-year period consisting of principal and interest. So they're due either monthly or quarterly, depending on which method you choose, and they're fixed payments for the life of the loan. You cannot exceed the loan limits, which is 50% of your total balance, not to exceed $50,000. So as an example, let's say your solo 401k plan value is 200,000. Even though you have 200,000 value in your plan, the maximum you could borrow is $50,000. Another example, let's say you have $50,000 in your plan. The maximum you can borrow would be $25,000. Now, the minimum loan amount is $1,000. You cannot borrow less than that. You also have to be careful about having multiple loans. You can have multiple loans, but you cannot go over that aggregated limit that we just discussed. That 50% limit up to 50,000. What is more, if you have a lot of outstanding loans at once, you're going to have separate payment schedules, which could be tough to keep track of because you're going to have to make separate payment schedules, separate payments. And if that loan goes into default, then you're going to have to pay taxes and penalties. So, and typically, I don't recommend having more than 2 or 3 loans outstanding for the aggregated value. Most clients just do a one-time loan up to the maximum limit once they have all the available funds in the plan. Let's keep talking about the loan. So again, you can borrow 50% of your solo 401k funds through a participant loan for any purpose, and you have to pay back over 5 years. If you use the loan towards the purchase of your primary residence, then it can be extended to 15 or even 30 years. But if the loan proceeds have to be used towards the purchase of your primary residence. Okay, let's keep talking. A great question. Keep on asking your questions here as we continue to go over today's topic, which is why a solo 401k is a good idea. We talked about investments. We talked about the loan capability. We were talking about the contribution amounts. So again, you can make large contributions with the solo 401k plan. For example, for tax year 2024, the contribution limit is $69,000. That's a lot higher than you can contribute to an IRA, which is typically $7,500. And you still have time to make contributions to the solo 401k plan for tax year 2024 here in 2025. You have until your business tax return due date plus timely filed extension. Also, you still have time to even open a solo 401k plan here in 2025 so that you can make contributions for 2024. You have until your business tax return due date plus timely filed extension. So we've done presentations on how you can still open a solo 401k plan in 2025 by your business tax return due date plus timely filed extension so that you can make contributions for 2024. Now, for 2025, the contribution limit is $70,000. So that's another possible good idea on why it's good to open a solo 401k plan is you can make high contribution amounts. You can also make catch-up contributions if you're age 50 or older. The catch-up contributions are put in place by Congress to help you catch up with saving for retirement in your later years. You can also make a super catch-up contribution of $11,250 if you fall within an age range of 60 through 63. You can make that catch-up amount of $11,250 instead of $7,500. So you can make both. Okay, so those are some things to consider of why a solo 401k is a good idea. Now, a solo 401k may also be a good idea if you're trying to utilize what's referred to as the Mega Backdoor Roth Solo 401k plan. With the Mega Backdoor Roth Solo 401k plan, it's similar to the Backdoor Roth IRA, but they're both different. With the Mega Backdoor Roth Solo 401k plan, you make voluntary after-tax solo 401k contributions, which can be made all the way up to the overall limit of $70,000 for 2025, $69,000 for 2024, and you still have time to make 2024 voluntary after-tax solo 401k contributions and open a solo 401k plan now in 2025 for making those 2024 voluntary after-tax solo 401k contributions, and you then convert those to the Roth solo 401k or the Roth IRA. That's why it's called a mega backdoor Roth solo 401k, which is a way of indirectly getting $69,000 or $70,000 in Roth solo 401k funds into your plan by utilizing the voluntary after-tax solo 401k bucket. Now, another reason why a solo 401k plan may be a good idea is that you can consolidate retirement accounts to the solo 401k plan, meaning that you can transfer a former employer plan, such as a 401k, thrift savings plan, 403b plan, which is for teachers and hospital workers, a defined benefit plan, profit sharing plan, a 457 governmental plan, and even pension plans, and as well as traditional IRAs, SEP IRAs, simple IRAs, as well as the gains in what's called a non-deductible IRA. Those gains can be transferred to the solo 401k plan as well via a transfer, aka direct rollover. And we would assist you with those transfers so that it's done as a non-taxable transfer. So that's another reason why a solo 401k may be a good idea. So let's see if we have any other questions for now. Looks like not at this moment. Now, another reason why a solo 401k may be a good idea. Again, shoot over your questions like you've been doing. We'll be happy to cover those on the air here this morning. Please like our video, subscribe to it, share it with others in your network, so that it helps us get the word out to other solopreneurs like yourself. Okay, now the $1,500 solo 401k auto contribution credit, that's another good reason why you may want to open a solo 401k plan. And the reason for that is that the auto contribution credit is a way that the government essentially subsidizes the cost of having a solo 401k plan. And let's go over how the auto contribution works. I'm also going to share a guest post we did on a website called the White Coat Investor by one of my colleagues here regarding the auto contribution credit. Let me share that here while we're at it. There it is. So take a look at that. Share it with your CPA, especially because a lot of times CPAs are not aware about the auto contribution credit, and they oftentimes confuse it with the tax credit, which is different, as that link there describes. Now, it looks like we have another question here. How much do I have to open a solo 401k plan? Well, there's no limit regarding how much you have to open a solo 401k plan. Instead, you have to meet certain eligibility requirements, which means you need to be self-employed and not employ any full-time W-2 employees in your business. Now, since you asked that great question, let's talk about the solo 401k eligibility checklist. So as long as you're eligible to open a solo 401k plan, it can be open with a zero balance. You can then make contributions based on your net self-employment income, or you can transfer IRAs or former employer plans to it as well. So you need to be self-employed. It doesn't have to be a separate entity. In other words, you can be a sole proprietorship where you're a contractor, you get a 1099, miscellaneous, and then you report that on your, not miscellaneous, but an NEC, I should say, 1099 NEC, and then you report that on a Schedule C. Now, you need to be reporting self-employment income to be able to open a solo 401k plan. So you need to be doing self-employment activity. So there's no minimum amount of self-employment activity. You just got to be doing the actual work, the material services. As a matter of fact, in certain years, you may not have any earned income to contribute because you may have more expenses than actual money coming in from self-employment activity. So those are the things to keep in mind. You can also have a solo 401k and also participate in your daytime employer 401k. So if you're moonlighting on the side, you can open a solo 401k for your side hustle, and you can still continue to contribute to your daytime employer and even open a solo 401k plan. So those are some things to keep in mind. Great question. Okay, let's go back and finish our conversation of why a solo 401k is a good idea or maybe a good idea. So we were talking about the auto contribution credit, and I sent over a link there to take a look at that regarding the various solo 401k tax credits. Now, specifically, a solo 401k plan qualifies for what's referred to as the auto contribution credit. It's a $1,500 credit that you spread over a 3-year period. It's spread out in $500 increments over a 3-year period. It's a dollar for dollar tax credit. So over 3 years, you get a $500 deduction each year. Now, you must have a solo 401k plan from a self-directed solo 401k plan provider, such as my solo 401k Financial. Many of the traditional brokerage firms like Fidelity, the Schwabs of the world, the E-Trades of the world, or even Ascensus, that's another common provider, they don't offer a plan that has the auto contribution credit built into it. We do. We were actually the first ones to offer this type of plan starting back at the end of 2023, the end of December of 2023, which means that if you are an existing client of ours, we can actually add that auto contribution credit to your plan if you set up a plan with us prior to the end of December of 2023. Your plan would need to be updated to allow for this auto contribution credit. You can start taking that credit here in 2025 and in 2026 and 2027 for a total of $1,500 spread out over 3 years. If you're going to set up a solo 401k for the first time, or let's say you are restating from another provider, you would also qualify for the solo 401k auto contribution credit starting this year. Now, again, it can be added to existing accounts and also to new plans. If you've opened the plan with us January 1st of 2024 and after, we automatically add that auto contribution credit to your plan since it's now allowed. Now, once you add that to your plan, you don't have to make contributions in order to qualify for that auto contribution credit. So it's still available even if you don't contribute to the plan, which means that you can decide to make contributions to the plan in whichever fashion you want. So you don't have to contribute. You can make some contributions or no contributions. So in other words, you're not required to contribute to the plan to qualify for it. Now, the credit is claimed by filing Form 8881 each year. You file that form each year to claim that $500 credit for up to 3 years. To learn more about it, you can visit Code Section 45T, Notice 2020-68, and Publication number 560. Let me send over also a support ticket here. So again, if you are an existing client, we can add that auto contribution credit to your plan. You can just submit a support ticket to learn how. I just went ahead and shared that support ticket here on our chat here. So those are great reasons why a solo 401k is a good idea. Now with the solo 401k plan, there's reporting that also has to be performed. So you want to make sure that you choose a self-directed solo 401k provider who will provide these type of services at no additional cost. Clients of my solo 401k Financial will be provided these services, and it's covered in our annual fee, so at no additional cost. However, we don't have access to our clients' funds. So it's your responsibility to communicate to us when you need us to perform the following types of compliance reporting for your plan. So a Form 1099-R applies when you process a conversion from your solo 401k plan of pre-tax solo 401k funds or voluntary after-tax solo 401k funds. Anytime you process a conversion of those funds to the Roth solo 401k, that triggers a Form 1099-R. Also, if you take a distribution from your solo 401k plan, that also requires the issuance of a Form 1099-R, which has to be filed with the IRS electronically and a copy sent to you to file with your taxes. Again, as long as you timely request that from my solo 401k Financial, we'll perform that reporting at no additional cost. But you need to let us know when that's required on your end when you do these type of transactions. Similarly with the Form 5500 Easy, That's an informational return. So it's not a tax return, but an informational return that applies when the market value of your solo 401k plan is greater than $250,000 as of the end of the year. So if the plan year for your plan was December 31st of 2024, for example, and the plan value, all the assets in the plan, so all of your funds, all of your wife's funds in the plan, if you're both in the same plan, or your husband's funds in the plan, or if multiple owners are in the plan, those all need to be added together. And also, if you have a defined benefit plan for your self-employed business, you also have to add that amount to determine if the total value of the plan is greater than 250,000 in value. If it is, then the Form 5500 Easy is due by July 31st of this year. So you need to timely let us know so we can prepare that for you. All right, so these are the reasons why a solo 401k is a good idea. So thank you for joining today's daily webinar. Thanks for asking your questions. Again, please like our video, share it with others as it helps get the word out to other solopreneurs. And we'll be back again live tomorrow. Until then, have a great rest of the day.